For generations, people across the world have believed the comforting idea that the US dollar is unshakable, eternal, and immune to decline. The dollar was seen not just as a currency, but as a symbol of stability, strength, and global order. But now, quietly and faster than almost any expert predicted, that belief is being challenged. What was once considered impossible, the weakening of the world's reserve currency, is now unfolding in real time. And the mystery is not whether the dollar is losing power, but how it is happening so quickly. If the United States still has the world's biggest economy, the strongest military, and immense global influence, then why are so many nations suddenly moving away from the dollar? Why is demand shrinking faster than the most bearish forecasts? And perhaps the biggest question of all, what will the world look like when the tipping point finally arrives? To understand this moment, we need to go back to the mid-20th century, when the world was devastated by war and desperately searching for stability. At Bretton Woods in 1944, with Europe destroyed, Japan rebuilding, China isolated, and Russia recovering, the United States emerged as the only nation strong enough to anchor a new financial order. The dollar became the centerpiece of global trade, backed by massive gold reserves and unmatched economic power. But the surprising truth is that the dollar didn't rise simply because America was strong. It rose because everyone else was weak. Nations needed an anchor, and the dollar was the only one available. Yet no currency remains dominant forever. Power shifts, economies evolve, and time erodes even the strongest foundations. As the dollar grew more powerful, the world became increasingly dependent on it. Oil was priced in dollars. International loans were dollar-backed. Trade between foreign nations often required dollars, even if the US wasn't involved. But this dependence created a vulnerability. If the world relied on the dollar, then the world was also exposed to decisions made by the United States. When America printed trillions of dollars, countries absorbed the inflation. When the US imposed sanctions, foreign economies suffered. When American interest rates rose, global debt became more expensive. Around the world, quiet resentment grew. Nations began asking a dangerous question. What happens if we stop relying on the dollar? For decades, the question remained theoretical. No country had the economic strength or technological ability to break free from the dollar. But then came a series of events that happened so quickly, so unexpectedly, that they accelerated a trend no one thought they would live to see. The first shock came when the US printed unprecedented amounts of money during 2022-2023. Trillions of dollars flooded the global market, igniting inflation everywhere. Countries realized they were paying for America's monetary decisions. Then came the sanctions era. When the United States froze another nation's reserves, dozens of countries panicked. If the dollar could be used as a weapon, they began to question whether it was safe to rely on it. Around the same time, BRICS expanded rapidly, building their own payment systems, trade networks, and currency agreements. Suddenly, there was a coordinated alternative to the dollar. In 2024, an event once considered unthinkable took place. Major oil exporters began selling oil in currencies other than the US dollar. The petrodollar system, which had protected America's global dominance for nearly 50 years, finally cracked. Meanwhile, digital currencies gave nations a new way to move money without needing US banks. Central bank digital currencies. CBDCs allowed countries to bypass SWIFT entirely, making the dollar's role in international transactions less critical. And while all of this was happening, the US national debt exploded past $35 trillion. Countries saw an uncomfortable truth. The United States was spending far more than it could reasonably repay. As these pressures combined, the world began diversifying away from the dollar. Global reserves in dollars dropped from 71% to nearly 55%. With most of that decline happening after 2020, more nations began settling trade in local currencies. Emerging economies reduced their U.S. Treasury holdings. New digital settlement networks started replacing traditional systems. And for the first time in decades, countries openly challenged America's monetary leadership. The shift was not gradual, not predictable, but fast, coordinated, and aggressive. When the U.S. tried to slow the decline, the efforts backfired. Raising interest rates strengthened the dollar temporarily, but strained global debts, pushing nations further away. Printing more money calmed the domestic crises, but alarmed foreign governments. Sanctions encouraged countries to build alternative systems. Diplomatic pressure created resentment rather than loyalty. and relying on America's past dominance proved ineffective in a world that had become multipolar, technologically advanced, and increasingly independent. The story unfolding today is not unique. Every reserve currency in history has followed the same cycle: rise, peak, overconfidence, debt accumulation, foreign rejection, and eventual decline. It happened to the British pound, the Dutch guilder, the Spanish real, and even ancient currencies like the Roman dinar. In every case, the end was not caused by collapse, but by transition, slow decline, followed by a sudden reset. The US dollar is now moving from the late stages of dominance into the early stages of replacement. The dollar will not disappear. America will not suddenly lose all its influence. But the era of a single, uncontested global currency is ending. The world is shifting toward multiple reserve currencies, decentralized digital payment systems, regional trade blocs, and shared economic power. The future financial system will be multipolar, not unipolar. The dollar will remain important, but it will not remain alone at the top. The real concern isn't the decline itself, but the transition. A global economy built around one dominant currency is now being forced to adapt to many. This shift could be smooth or turbulent. It could be orderly or disruptive. It could stabilize the world or destabilize it. And what happens next will shape the economic future of every nation, including the United States. For viewers, the key lessons are clear. First, no currency remains dominant forever. Even the dollar, backed by the world's largest economy, cannot escape global diversification. Second, the transition away from the dollar is happening much faster than predicted. What experts believed would take 50 years is now unfolding within a decade. And third, we are entering a new era of global finance, one where economic power is distributed, technology reshapes money, and the world is no longer centered on a single currency. The question now is not whether the dollar will lose influence, but how the world will adjust as its dominance fades. Will the transition be peaceful, or will it trigger financial chaos? That is the uncertainty we must now confront.